on this.
Okay. I'm super excited to be speaking about crypto and the future of the market today with Koosh Azimian. He's the founder of 310, a machine learning for biotech company, the ex-tech lead at Facebook, now known as Meta, and a blockchain expert who has published peer-reviewed papers in cryptography. Koosh, so excited to speak with you.
Thank you. Thank you for having me. I'm excited to start this discussion.
I'm going to jump right into it. So my first question is, why has crypto been down in the last few months? We were seeing an upward trend, and now there's growing concerns with pricing of crypto, the value of crypto.
Yeah, if you want to follow the price, I think the main factor for the pricing in the last 2 years have been one word: macroeconomy, and probably a little bit of public perception, but pretty much macroeconomy. So, and if you want to look at the broader picture, you can say it's not crypto that is down, it's everything, every growth asset that has been down. It's just a bigger image that you can look at. So if you want a little bit longer answer, we can go to what has happened in last 2 years in the world and in the market. So basically, at the beginning of 2020, COVID happened. Before COVID, before the pandemic starts, we had Bitcoin around range of 9K. And then COVID happened and everybody panicked, everybody started selling. And in April 2020, we reached very low level. Even we reached 3,000 at some point. And everybody panicked, everybody started selling. I didn't think that was a rational decision at the time. I obviously didn't sell, but the market panicked and they started selling not only crypto, all sort of asset, and especially everything growth assets. So this is something that basically brought the price of Bitcoin to close to 3,000. And then we had what everybody saw. The Fed and all the central banks all around the world started pumping money into the economy. They brought the interest rate to zero for a very long time. And they started buying assets. If you look at the Fed balance sheet, it went up from 4 trillion all the way to 8 trillion in a very short period of time. So we had a very long period of pumping money and easing into the economy. And because of that, a lot of investors lost their faith in fiat money and started like pumping money in all sort of assets. One of those assets, one of those safe basically places were crypto, and especially Bitcoin. So we had crypto, and you can see the same thing is happening into all sort of growth assets in ARK investments, in everything that has anything to do with metaverse, with video gaming, anything that is about future, about digitization, about electric car. And we had Bitcoin shooting all the way to 69K at November 2021. At the same time, this is the last piece of the puzzle. At the same time, we're seeing the inflation reaching its highest point in decades. We had at 6 before the end of the year, and the latest number was 7.5. So when inflation reaches this level, everybody expects the Fed to hike the rates, basically to slow down the inflation a little bit. And market is always future looking. So because of that, and because of the fear of inflation and the rate hike, everybody's pulling back a little bit. So you can see this in ARK, you can see it in all sort of growth assets, in Zoom, in a little bit in Tesla, in all the genetics company, in all the metaverse assets, and crypto is not apart from that. So, and then uncertainty, because uncertainty is also part of that. We have the war, we have the fear of war, and then we don't know what Fed is going to do. So that's pretty much what I think drove the prices in the last 2 years, and that's where we are.
Right. So you're saying it's not just crypto, it's other assets as well.
Yeah, I think the same thing is happening to a broader set of assets. they moved a little bit differently, but if you look at the charts side by side, if you look at RK, if you look at the electric car, if you look at SPACs, if you look at broad range of growth assets, they're kind of moving on the same direction during this last 2 years period.
Yeah, very similar trajectory. Okay, so my next question is, was it only the macro economy that has affected the value or price of cryptocurrencies in the last 2 years?
I think the biggest part was the macro, and then the public perception and moving of basically big money looking for safe places and parking money to crypto as a store of value. That was the biggest part, but there were some crypto specific and Bitcoin specific movements also, right? For example, we had more favorable regulations about crypto in last 2 years. Right. We had more institutions coming to crypto. We had Tesla, all the Tesla news about accepting Bitcoin as a form of payment, about collecting Bitcoin as their reserve, about all the news about macro strategy, putting Bitcoin in their basically corporate balance sheet. They were all this mostly good news. We had Coinbase going public. Then on a technical level, we have Ethereum 2, all the basically buzz about Ethereum 2 development, about NFT, about metaverse. At the same time, we had also some bad news. For example, China banning crypto and Bitcoin. That was probably the biggest, and India. And we had also some not that big economies like El Salvador accepting Bitcoin as a basically their base money.
Right. That was a lot of activity going on in the past 2 years. Yeah. So then where is the market going next? Where do we go from here?
Yeah, it's I always find it very hard to predict this kind of things in a period of few months, but I always try to look at things in a horizon of at least 4 to 8 years. That's my horizon, and it's pretty hard to predict anything in a shorter period of time. So, and in order to get that, we have to analyze what Bitcoin is and what crypto is and what is the total addressable market, what kind of market this basically decentralized digital tokens, what problems do they want to solve for the world, right? And this is how I look at things. These are the numbers that I compiled basically in January. We are in February. The numbers should be pretty much the same. The numbers are a little bit lower.
Okay.
If you look at the total market cap of gold, it's around 11 trillion. That's the biggest store of value. That's the standard store of value. If you look at market cap of Visa and MasterCard, they add up to $0.8 trillion. So these are just some numbers so we get a perspective of what are the sizes. If we look at M2, which is money supply plus a few other things, it's at 21 trillion. If we look at NASDAQ 100, total market cap is around 15 trillion. If we look at FANG stock plus Microsoft plus Tesla, it's something between 10 to 11 trillion. And if you look at US bank assets, it's 27 trillion. Now the question is, where is the place for crypto in this? I think crypto, from what we have seen so far, can obviously take some market from gold, right? As a store of value, it's already proven to be secure. It's probably more secure. It's easy to transfer, and it's just a digital version of gold. That's something that is proved.
Koosh, really quickly, because I love what you said about what problem is this solving. So if there's someone that knows nothing about cryptocurrency, what problems does Bitcoin and other cryptocurrencies solve?
I mean, the Bitcoin, first of all, is just a trustless, flat, decentralized monetary system, right? And what does that mean? That basically means you can have a banking system without the central banks and without the commercial banks. So it's a peer-to-peer exchange of value. I can send money to you without touching a commercial bank and without being subjected to all the changes from a central bank, right? So if for example you hold any fiat currency, you're always in the risk of devaluation, right? By printing more money from central banks. That's the biggest, and it's not even like a risk. It just happens all the time. You don't have that risk with Bitcoin. You know exactly what you're holding, and it's being regulated by some math formulas that everybody knows. It's very transparent and it's shared between the entire world. Like there's no trick behind it, right? So that's the first problem. That's the biggest problem.
Right.
So I was going, basically replacing gold, some chunk of that 11 trillion, if not all of it, I think that would be something doable by Bitcoin or the entire crypto market. I think the biggest part is getting some chunk of the money exchange, getting into the market of Visa and MasterCard. That's a big part of it. Replacing the money, this is something that people talk about it. We don't know if it's going to be that big, but it could get some market share from some fiat currencies in the future. So if you go back to the last part about Visa and MasterCard, if you can just travel anywhere in the world and just this is some international money that works, you don't need to pay the exchange rates. I mean, that's by itself, it's a big thing, right? So why don't you use this instead of any other sort of money? And then as far as when I talk about NASDAQ being $15 trillion, so the thing is, a lot of those companies could become decentralized. This is probably further away. We can have decentralized social media, decentralized e-commerce. All these things could become decentralized and can be put on top of blockchain. So that's another big market that I don't think we're anywhere. We're probably 5 to 10 years away from that, but that is another market. And then, yeah. So based on that, I think in my prediction is by the end of 2025, basically that would be like around less than 4 years. Yeah, 36%, like 46 months from now. I think it's the likelihood of going above 10 trillion, if nothing happens, if no major disaster happens to the crypto, I think that's very doable. And my assumption is based on, we can talk about, we have to solve some scalability issue that's a big challenge for now. We have to move from a store of value to some more transaction adoption system, model. And then we have to see some early application of those DeFis or decentralized networks being built. I think, if some of that, I think 10 trillion is not very far from, and I'm looking at basically the live number. So we're at 1.9 trillion as of today. So that means like we have basically 5x to growth, like 5 point,
And so what are the risks and challenges here?
I mean, there's some like probably some major, crazy risk that the whole thing gets hacked. That seems pretty unlikely at this point, unless, I mean, the chance of such a thing happens is almost as much as we have some security breaches across everything. That's probably a situation that we don't want to, we're going to be in bigger trouble than crypto assets losing their value. But I think the challenges, I think if you talk to anybody, probably majority of the crypto community talk about regulation as the biggest challenge, but I don't think that's actually, I think we have seen every time a technology comes in and it's really applicable and people like it, the regulation just resolves itself. I think the biggest challenge that it's engineering and a scalability challenge, and has not been resolved. Actually, it's been quite a while that people talk about it and it's not resolved yet. So if you look at Bitcoin network can handle only 7 transactions per second as of today, right? This is a super low number. This number is around 65K for Visa network.
Yeah.
So we have to get from 7 to 65K if we, and there are challenges with the decentralized network. It's always harder to scale that. So Ethereum is at 15 at the moment. The expectation and the promise is it's going to get to 100K TPS when we go to Ethereum 2.0, but that has been delayed for a while. There are other networks like Solana that have higher TPS with some with expense of centralization. I mean, a lot of people might disagree with that, but anyway, we have this gap, right? So we have to scale this. We have to bring the cost of transaction, I would say sub-cent, even like, yeah, we have to bring it a lot lower than what it is today. That's, I think, the biggest challenge. That's the does that mean
like gas fees?
Yeah, exactly. The gas fees should go lower. That's exactly what it means. So we have to let more transaction go through the network so the gas fees goes lower. So the second thing, I think we need to have some easy applications for the public to understand and to use crypto. The whole user experience is not good, which is kind of related to the first problem. So once we reach that scalability, the second piece would be more solvable. And yeah, at the end, we need to have some public adoption, right? Which we saw that after COVID, a lot of that happened with Elon Musk tweets and Tesla and people getting to Robinhood and trading crypto. A lot of this is happening. I think that has been less of a problem in the last 2 years. The last part, I think the regulation. I mean, we saw that in China, it got banned, and now with all the political things that we're seeing happening, so there are risks about regulations. But I think once we solve the engineering problems, those risks are not going to be as
right. I think once the things that you mentioned are gradually solved, mass adoption is much likelier to happen. So then what are some areas that we're seeing growth in?
That's my favorite. Yeah. I think I would basically separate it early, mid-cycle, and 5+ years. I would say early growth areas that we can expect some basically growth would be store of value, right? More people use this as a store of value, basically as a safe haven, as just some money that you put it under your pillow for like.
Yeah, I hear all the time, this is a hedge against inflation, especially with Bitcoin.
Yeah, and then like, see, like we live in US, but now I'm in Canada actually, and then we're kind of like, we're not in that hyperinflation places. Like, look at like all the other countries that do not have this type of a safe and stable currency. Like, we saw those countries moving toward Bitcoin and crypto faster than basically Western countries for a period of time. So store of value is a big thing. More institution coming to crypto. We have all these surveys that all the hedge funds, all the institutional money, all the sovereign funds thinking of coming to the crypto in 2022. So that's, I think, more money coming to the space. NFT, as you're like more active in this space than me. So this is a huge marketing area, because we're seeing all the art, all the talented artists, visual artists, musicians, they're coming. And basically, I think crypto is becoming, in a very decentralized manner, is building the largest PR firm for itself, right? This NFT is just like a PR and marketing for crypto at the end of the day. I think that's something that in early horizons that should bring some growth. After that, I think, again, I go back to my main point. I think we need to have cheap, fast international transactions. That's, I think, what the biggest value would be. Replacing the Visa, replacing the MasterCard, and just basically you fly to any country, you just swipe or whatever you want to do with your Bitcoin, and you just pay for everything frictionless, fast, and with very low cost. I think once that happens, the second thing that I think I'm expecting to see more of, as I mean, we're seeing a lot of development as of now, is DeFi.
Oh yeah,
bringing all the legacy contracts, the loan, the mortgage, all these things into blockchain. I think that would be something pretty big, and it's not necessarily the technology. The tech part of it is not that hard to build. I think the regulation and getting it works with the legacy systems, that's the more of a challenge. And then I think more down the road, I think that's where we're going to see the true premise of the blockchain. It'd be basically complex DeFi transaction, metaverse, and we're going to get to basically one shared database for the internet. I mean, maybe not one, but maybe one, maybe many. But the thing is just one shared ledger, consensus, database, whatever you want to call it, for like maybe one, maybe many. There's some discussions about this, that you can build anything. You can build social media on top of it. You can build e-commerce. Instead of having one giant company like Facebook or Google or Amazon that basically monopolize your data, the data is shared between everybody and everybody owns the data. And then you're going to have your application layer applications on top of this large database that everybody can build. The development cycle is going to get faster, and things are just going to move faster. And yeah, that would be, I think, beneficial to everybody.
Yeah, as I listen to you speak, my thought is we're still very early. Anybody who enters this ecosystem, even now, is still early, and there's so much opportunity in this space.
Yeah,
that's what I'm getting.
Yeah, there's it's very hard to say which of these going to happen next, but I think we have at least like a 10 years roadmap ahead of us, 10 years roadmap of growth.
Yeah, that sounds right. All right, well, thank you so much for doing this with me, Koosh. I want to set up another one with you. I think there's so much to talk about and so much for people to learn. So
yeah, I think we should do probably one more episode about like different cryptos, like layer 1, layer 2, metaverse, and like the whole architecture. We can get into more details of everything.
Yeah, that's what I was thinking. All right, thank you. Thank you so much.
Thank you very much. Talk to you.
Talk to you.